I was not on mute.
Okay. Okay. So loss on foreign currency valuation unrealized account debtor to balance sheet adjustment account. So this balance sheet adjustment account is nothing but that will be nullified, and because now since there is a increase in the exchange rate, I need to book this expenditure because I need to take on in the balance sheet on 31st of October, because on 31st of October I'm going to prepare my balance sheet and P&L account. So at that time I need to show to my shareholders what is my liability towards foreign exchange, that loss or gain, if anything is there, I need to show in my books of accounts. So that's why since there is an increase in the US dollar, if I am going to pay today if I am going to make the payment to vendor, I need to shell down 6,300, not 6,000. So that's why 300 rupees extra I need to shell down. But this is unrealized because my due date is on 15th of next month, that is November. But as on 31st of October, I need to book the loss. Though it is unrealized, I need to book the loss. So that's what I need to do. Loss on foreign currency valuation account debtor to balance sheet adjustment account. Since the foreign currency loss is unrealized, we need to reverse the above entry on 1st of November. On 1st of November 2013. Exactly the same, because on 31st of October my books of accounts prepared, that is balance sheet and P&L account are prepared. In that I have considered 300 loss. Since that is unrealized, I have to reverse the same entry. So I'm reversing it on 1st of November, right? So that is nullified. So what is the accounting entry? Same. Now balance sheet adjustment account is going to be debited. The reversal entry can be entry on 1st November is balance sheet adjustment account debtor for rupees 300 to loss on foreign currency valuation unrealized account. Loss on foreign currency value. So this gets nullified. Right. This is only for the purpose of showing in my books that there is a loss. Right. Since that is unrealized, that I'll be reversing it on the next day. Now on 15th of November, payment of 100 USD is due. Then the exchange rate is say 65 rupees. Right. On that date is 65 rupees. Now the loss on foreign currency valuation is going to be 500. That is 60 minus 65. Right. On 15th of November, payment of 100 USD is due. Then the exchange rate is 65. So now I have to purchase dollar at 65 rupees. So that's why what I need to do is I need to buy the dollar for 65. That's why my loss is going to be that 500 rupees. That is, so vendor account debtor 100 USD to bank account 100. At the time of making payment, what I do, see in USD I'll be taking only USD, but at the time of paying I'll be using, here it should be 6, of course. Here it is going to be 6,500, and there are two things here: vendor account debtor to bank account because bank my outgoing amount is 6,500, not 6,000. Remember that. Right. My vendor account is showing 6,000 balance. That's why my vendor account is going to be debited with 6,000. My bank account is going to be credited with 6,500. But the difference of this 500 is loss. Debit loss on foreign currency valuation realized. Right. Say account debtor 500 INR. Right. I'll repeat once again. The entire scenario I'll repeat. Try to understand once again. Carefully listen to it. On 1/10/2013, raw material purchased on 45 days credit term. Exchange rate is rupees 60 against $1. Okay, so I'm going to buy raw material. So at the time, raw material account debtor to vendor account 100 USD, 100 USD. So if I see my GL, system will show me 600 INR, 600 INR. Okay. On 31st of October, this is as per foreign currency fluctuation, foreign currency revaluation as per the accounting standards. I think if I'm not wrong, it is going to be accounting standard 21 or 17. I don't remember. As per Indian accounting standard, it is there like accounting standard of every country, not only India, US GAAP or IFRS, whatever it may be. We need to consider the loss on foreign exchange, that valuation, right? So that's why here on 31st of October, I'm going to reevaluate my vendor outstanding amount. So I have to show to my shareholders what is the liability that we have towards vendor. So that's why on 31st of October, 1 USD is equal to 63 INR, right? And on the date 31st of October, the liability of rupees 100 USD is equal to 6,300. So revaluation of foreign currency on 31st October, if you calculate, right, it may be, see, I'm showing you here only $1 US. I may be paying to different vendors, right? Different vendors and different currencies, maybe GBP or USD or Euro or any other currency, whatever it may be. I need to evaluate all the currencies, right? So that's why we need system. Use a small, very simple like this, nothing is required. So here what I'm going to do. So loss on foreign currency valuation unrealized account debtor to balance sheet adjustment account 300. Since this is unrealized, not realized, I'm going to reverse it on 1st of November. On 31st of October, I'll be passing this entry, reversing on 1st of November. Right? So what happens now? On 31st of October, my unrealized loss on foreign currency valuation will be showing 300 rupees extra. That is loss. So this should be booked to the P&L account. Any loss on foreign exchange, the currency revaluation, we need to book it to the P&L account. Right. Now on 15th of November, payment of rupees $100 is due. Right. On 15th of November, we need to make the payment. So in such case, then the exchange rate is say 65 rupees. So now the loss on foreign currency valuation is rupees 500 because 60 minus 65. So original 60 rupees originally when we have purchased it, now it is 65. So how that is going to be recorded by the system is vendor account debtor, it takes only 6,000 to bank 6,500 and loss, this is realized because since now actually we are making payment, loss is now this will be booked to the P&L account. This will not be reversed again, right? So this is the scenario. We need to see how system is going to take this. So GL accounts required in foreign currency valuation. Okay, first one anyway anyhow not required. Second one, gain on foreign currency valuation realized, gain on foreign currency valuation unrealized, loss on foreign currency valuation realized, loss on foreign currency valuation unrealized, right? For see here in this case we got the loss. We don't know in case of customer, if you are making sales to customers, you may be getting gain. So for that purpose, I need to create loss accounts as well as gain accounts. And this is going to be balance sheet adjustment account. This is only an adjustment entry, adjustment only for the purpose of reversal. It will be nullified every time. We need not give any importance to that. That is only, of course, that is required at the time of posting the entry. Right. So this is the scenario first of all. Any doubt on this scenario, anybody? Okay. So anyhow, let us create a GL account. Gain on foreign currency, gain on foreign currency valuation. Go to FS00. Right, I am using gain on foreign currency valuation realized. Here gain, so other income I am taking in other income. Realized, unrealized. In Dr. Edlab bulk drugs I am creating. Account group, other income. Right, group is other income. There is a P&L account. So gain on foreign currency valuation realized. Right. Gain foreign currency valuation realized. Right. Line item display 01, nothing special here. G001. Save it. Next is gain on foreign currency valuation unrealized. 306. Right. 306 I can create with template. 305 I can copy it. So gain on foreign currency valuation unrealized. Unrealized. Gain on foreign currency valuation unrealized. Everything is same. Next, loss on foreign currency valuation realized. 400, 505. So 505 is nothing but interest and bank charges. Financial charges, I think, yeah. interest and financial charges. This is also so loss on foreign currency valuation realized. But first one is gain, now loss. Loss on foreign currency valuation realized. Loss foreign currency val realized. Right. Then 400 506. So this is unrealized. Unrealized. Then coming to balance sheet adjustment, 4 accounts we have created. Then balance sheet adjustment account 200 710. 200 710. 701 other current assets. Other current assets. Right, balance sheet account. This is just balance sheet adjustment account. So balance sheet adjustment account for foreign currency valuation. So balance sheet only balances in local currency. Line item display 01 G001. Right. So we have created all the GL account. Now other GL accounts to be used. I did not say other GL account to be created. So other GL account to be used is nothing but anyway sundry debtors in case you are making the sales, and sundry creditors when you are making a purchase of raw materials. Right. So these are the things. First of all, we need to create regarding the master. Then next is coming to the configuration process, etc. Right. So we'll take it up tomorrow sharp at 9:30, and at a stretch we'll complete it so that the total process you'll understand. And it may take more time tomorrow because so we need to make the configuration, follow the business process, and see the results. Right, that's why it will take a little more time. At a stretch we'll do it. Okay, so let us close it today. I'm stopping the recording.